get more on Chinese stocks traded here in Hong Kong and elsewhere around the world. We have the chief of the #1 rated Asia-based long-short equity fund, Clive Zhang, Executive Director of Vision Finance Asset Management, joins us. And Vision Finance's China's Ocean Fund is up 93% so far year to date. Welcome to the program, Clive. So let me just ask you, we have this debate about bulls versus bears. Do you see maybe a correction of sorts in the coming months over the summer?
Well, it's possible it will a small correction for Edge share because we are focusing on Edge shares and red chips in Hong Kong. Maybe or maybe not, but we take a longer view. This year we still see Edge share will reach 13,000. So in terms of this forecast, you can see I'm a bull for Edge share.
You definitely are a bull indeed. That's right.
Yeah.
So you mentioned that you buy Chinese stocks in the form of H shares, which are traded here in Hong Kong, B shares as well, and also these red chips traded here in Hong Kong. Maybe some ones Chinese stocks listed in Singapore and ADRs. In terms of value, which parts of what I described are you investing more into? Where is the best value to buy Chinese stocks these days?
Where, according to all stock selection criteria, we choose some stocks. Today, I'll give you 4 stocks which are in our top 5 top 5 holdings in our portfolio. Number 1 is called Comba. That's 2342 Hong Kong equity. Number 2 is Inspur. That's 596 Hong Kong. Number 3 is Digital China. That's 861 Hong Kong. And number 4 is Skyworth.
Yeah.
That's 751 Hong Kong. Yeah.
Well, let's break these individual stocks down. These are your top 4 holdings in your fund. So let's talk about Comba Telecommunications. This makes antenna and transmission products. Why is this stock your top holding in your fund, your Vision Ocean Fund?
Where when we choose this one, it was cheap. No, although it
cheap.
lost a lot.
It's up 180% so far this year.
Yeah, but look at the focus PE. Now it's about 11 times. But this year, 2009, the earning growth will be about 40 to 50% this year. So it will reduce the forecast PE rapidly. Next year, maybe it's better than this year because its business is wireless enhancement. When the 3G goes on, when the 3 operators, China Mobile, China Telecom, and China Unicom, finish the basic capex, they will do the enhancement. So that time, Comba will do better.
Yeah.
So we forecast that maybe this year, next year, and the third year, the compound earning growth will be about 20% CAGR.
Right, so, and you think 50% for the stock, so more this year?
Yeah, I mean, based on the close price yesterday, the upside for this year or for the 12 months from now, the upside at least 50% in my view.
Okay, wow, that's still quite a ways to go. $1.60, well, actually $3.69 at this point, trading here in Hong Kong, up 76% so far in a one-year basis, and you say 50% more gains to come for 2009. Well, let's talk about the I guess the other holding in your fund, which I guess your number 2 is Inspur as well. And it's interesting, Inspur International 596 Hong Kong is the code for this stock. It's also one of the top holdings and recommendations for Macquarie. We'll talk to the chief China strategist later on. But what do you see for Inspur? It's gained 42% year to date.
Where you see this stock also is a high growth stock. Last year, 2008, the growth rate was over 700%. This year, the forecast earning growth is about 35%. So we will set a target from now, the upside at least 30%. It's the leading IT service provider and the software sourcing in China.
Yeah, that's quite interesting. It is an IT outsourcing company, provides IT services. But if you look at, say, the Indian IT companies such as Infosys and Tata, they're reporting declining sales. I mean, what about for Inspur? It must be hit by the global recession in some way.
You know, the external sector, yeah, may be a little bit shrinking for demand. But China relatively is doing very well because of the domestic demand stimulated by the government package, the 4 trillion renminbi investment program. Also, the China's economy, although slowed down a little bit, is doing very well this year. I think GDP is likely to reach the 8% target, even lower than 8%. Maybe it's 7 or 6 or 7.5. That's still a very high figure relative to other part of the world.
Okay, yeah. And you still think this stock has maybe 30 to 40% gains in it for this year?
Yeah, 30% upside.
But I want to take a look at the price to book for this specific stock for Inspur International, because it is more expensive than its peers. Does it deserve that?
A little bit expensive, but I just mentioned the high growth. You know, for the high growth stocks, usually it deserves the premium on PB. So that's why I said this year, although I say because with the high growth, but our upside target is not so big compared with other stocks. That's due to high PB. Okay. But the high growth will offset this problem.
Okay, Clive. Okay, we're going to continue after this break. We get a commercial right now, but more stock picks from the man who runs Asia's #1 rated long-short equity fund. When we return, more with Clive. To send us your emails, we're watching out for them. Asia Edge at Bloomberg.net. Stay with us. Okay, as we discussed earlier, some observers are expecting the market rally to pause in the summer months because valuations are looking a bit rich. Now let's ask Bloomberg Stocks editor Richard Frost what he's hearing. And Richard, Hong Kong and China stocks are looking expensive to some, especially if you have 14 plus PE ratios on the exchange. But what else are traders saying?
That's right, Susan. I mean, certainly if you look at Hong Kong, particularly at the start of this month, it was trading at about almost 17 times earnings compared with a low of about 6.9, and not that far away from the about 20 times earnings that it reached in that peak back in 2007. So certainly the gains have been very dramatic, and of course that's giving investors some pause for thought. Really, I mean, at the moment it's a case, and this is what people have been telling us, is how much greed triumphs over doubt, and vice versa. And with the negative comments by the World Bank predicting a deeper recession globally this year in their report yesterday, as well as Rubini coming out overnight, the economist there, saying that the global economy is going to face a double whammy of rising commodity prices as well as liquidity coming through. Today, we're certainly seeing markets decline on the back of that.
Okay, so I like that term, risk versus greed. Thank you for that, Richard Frost, our stocks editor in our Hong Kong newsroom. Let's bring back in Clive Zhang. He is the head of Vision Finance China, which is, well, according to Bloomberg data, the #1 rated long-short equity fund so far this year, returning 93%. So, Clive, let's take some questions from the streets of Hong Kong. Yesterday, we went out to see what they had to ask about Chinese and Hong Kong stocks, and here's what one pedestrian had to ask.
Okay, sure.
What do they see the China market and how it affects the Hong Kong stock market?
And what do you think of that? What about the Chinese market? How does that affect Hong Kong?
Sorry.
I'll paraphrase for you, but yes, one of the people that we interview wants to know about the Chinese market, and how do you think that's going to affect Hong Kong's stock market as well? What's your view?
Well, relatively speaking, there is a positive linkage between A shares and H shares. Now the A shares also doing very well. It's going to 3,000, near to 3,000. That will be provide a positive sentiment for Edge share as well. But the Edge shares, in terms of valuation, is more attractive. It's better than A shares. So that's why I said this year we set the target for Edge share at 13,000. A moment ago, I didn't give the reasons. Now I would like to give why I make this forecast. Number one reason is look at the last crisis, Asian financial crisis in 1997. In 1998, the Edge share went down to the bottom. Then in 1999, 1 year later, from the bottom, the lowest point to the highest point, the upside is 180%. Use the 180% upside to now the Edge shares. Last year, the Edge share lowest point is around 4,800. If we times that to 180%, that's 13,400%. So that's one reason. That's not the most important, just a technical chart. We look at the fundamental reasons. Number one, today China is much, much better than about 10 years ago, than the Asian financial crisis. Now there is pressure for renminbi to revalue it. That time in the Asian financial crisis, there was a pressure for renminbi to devalue it. That's a very big difference.
Right. So let me ask you this then. If you think that's a big factor, I mean, how much higher do you think the renminbi is going to go? How much more can it strengthen?
Well, in my view, the intrinsic value for renminbi should be around 4 renminbi to $1. So
That's
if you believe that, you can see renminbi assets, there's a big upside.
Wow. That's a really bullish view, considering the most bullish view I've heard so far, maybe 6.5 to the US dollar so far this year.
The intrinsic value, because the Chinese government controls the renminbi foreign exchange to lot exchange. So renminbi will revalue gradually. But the productivity in China enhanced a lot. In this point, the Edge shares, A share, especially for Edge shares, due to the attractive valuation, will go up a lot.
Okay. Well, Clive, you sound very bullish. So we have a viewer email coming in from Kirby Connor. He wants to ask, what do you see as the biggest risk to your bullish view?
Well, as a bull, you must have the sound basis. I said, look at the earnings, look at the PE. But of course, there is a small risk. If your forecast is not correct, maybe our return rate will come down a little bit. But we are long-term investors. As long we make most correct judgment, for example, if we hit 100 times, success rate is 70%, we're still a winner. So you see, our fund has a 20 months history. We are not best for every month, but for the most time, we are very good. So this year, year to date, we are the best fund. Right. But even look at the 20 months, or auto performance to benchmark is about 70%.
Yeah. Well, let me ask you this. You have done pretty well this year. You have only about $30 million in assets under management. I mean, are people trying to, come in and give you more funding and maybe handle more money?
Yeah, due to good performance, due to the share of views. So now we have more funds to negotiate with us. Yeah.
Okay, well, thank you so much, Clive. It was nice talking to you today. That's Clive Zhang of Vision Finance China. Again, he's the #1 Asia long-short equity fund on the year so far.